All right, here we go. Opendoor Technology had its earnings, and it's what we expected it was going to be. It wasn't going to be good. Of course, it wasn't going to be good. No one's buying houses right now. The interest rate is super high right now, so this is to be expected. But let's look at the chart and let's see what's going to happen next. Here we are. This is the 1 minute chart. I have it up only because the volume is super crazy right now. We get to see what's going on in after hours. Here is the big drop we had. But look, as you can see, you already know. Where are we trading at? We're trading still within my two blue lines that I drew on the chart about a week ago. It could have been 2 weeks ago, I don't know. But I put these lines on the chart as a key where we need to trade in. And we're still within those two blue lines. So guess what? I'm not worried. I'm relaxed. We already knew that this was going to drop. We don't know by how much. But right now, if this stays above $2, I'm good. If you're buying shares, to see this over $2 and hold it, that's a good sign. Because to me, it's only up from here. Why? Because interest rates are slowly going to drop. Could be slowly or it could be fast. We don't know. But interest rate has to come down at some point. Could be September. We don't know. But it has to come down at some point. And when the interest rate drop, this stock should go up as long as their business model works. I keep saying that, as long as their business model works. If the business model doesn't work, people don't want to use the app to make transactions to buy houses and sell houses, Opendoor may be in trouble. But if Opendoor business model works, this is only going to go up. Similar to Carvana. For me, I'm happy the earnings is behind us because I knew this was going to take us down some. A lot of people thought this was going to blast like a meme stock for earnings. What I would like to see, I like to see this stock hold between the 210 and the 220. If we hold between the 210 and the 220 after hours or tomorrow or even sometime this week, that's a really good positive sign. A neutral sign is just to hold that $2 mark. If we can hold $2 mark, we're good to go. Now, if we go below $2, like on this chart right here, see how we dipped below? We went to $1.84 and also $1.87. If we do dip below $2 and we go to 184 or 187 and we bounce back up, that's still a good sign. We just don't want to go down to 150 and lower, as I said before. 175 is our strong support, and our last support will be the 150 and possibly 125. But if we go to 125, that's a warning sign. The strong support is between 175 and $2. But if we can stay above $2, even better. So now what we're looking for is the interest rates to drop, the economy to slow down a little bit, which is, I think, it may happen. I think the economy will slow down a little bit. We're seeing evidence in the data reports that the economy is slowing down. The economy is slowing down. Opendoor should start going back up soon. The more volume we have and the more the stock price stays the same, that's good because it means people are loading. If we have a lot of volume and the price is going down at the same time, that's not good. But if we have a lot of volume and staying around the $2 area, what I mean by $2 area, $1.90, $2, $2.10. Anything between $1.90 and $2.10, I think is a good loading area for Opendoor. But who knows? It may be this week we move back up a little bit, or it could be early next week we move up some. But I'm in it for the long haul. But if we hold that $2, I'm probably going to keep buying more. That's why I say it's very important to subscribe to this channel, because I'm going to keep you updated every single day when I see positive signs that we could start moving back up again. And here's the hourly chart. We're still above the blue line, the $2. And based on the hourly chart, looks like our new resistance is going to be 225. 225 is going to be our new resistance now after this earnings. So we can hold at $2 and then go to 220 and break 225. We're back where we started from before the earnings, moving back up again. Opendoor does have an earnings call coming up. If you're interested in that, check it out. You don't know what they're going to say. Opendoor could get more volatile during this call. So during the call, we could see a lot more volume, maybe going up, or it could go down during the call based on what they say. We don't know what they're going to say. It could bring the stock down some, or it could bring it up some. As you can see we're getting a lot of selling coming up. 203, 204, 202. Because the call is probably going on, I haven't listened into it, but that's why we're getting a lot of selling right now. But even if Opendoor does drop some, like I said before, 175, 180s we'll be looking at. We're dropping below $2 right now because the call is going on. I just said it. Exactly what I just said. We're going to see a lot of volatility while the earnings call is going on. When the earnings call is over, we could move back up some. We'll see what happens. But we're getting a lot of volume A lot of volume on the sell side right now on the $2 area. Yeah, so we're going to get a lot of volatility, and it's going to go up and down, up and down. Basically, hold $2 and we're good to go. I'm going to keep it short and sweet because tomorrow is where we're going to see where we're going to hold at. Are we going to hold at $2 or not? Are we going to go above $2? Well, I got to find out. Hopefully, 210. That'd be great. But if it goes below $2, 175, 180 is what I'm looking at. All right, subscribe. Hope you enjoyed it. See you next time.